It's time for Options Corner. Kevin Green, senior markets correspondent here on the network, is here. So Kevin, first of all, welcome. Second of all, I know you're watching some levels. We just broke through 5,700 on the S&P 500. I know that was one of the levels that you were watching. So tell us about this, how notable this is and what comes next.
Yeah, it's pretty notable. We actually are seeing a pretty sizable amount of volume to the downside here today over the last, let's say, hour and a half here. And you really want to try to recapture the 5,700 level, but it does appear from a technical standpoint, we might have came back, retested, and then reject and go lower here. But there's another area that we are focusing on here. It's going to be 56.9 or 56.80 is going to be another area of support here for the market, especially if you're looking at that volume chart. Today, it has just been consistent selling, though. We haven't seen any type of bounce back reactions within the equity markets for now. And the reason why I said that 56.80 level is going to be key is because once again, last week, where we broke out on Friday, we had this triangle formation, descending triangle formation taking place here. And that neckline is basically right there at that level. So you want to be able to bounce off of that, try to reclaim 5,700 and move higher. I'm just not seeing any type of volume bullish flows for that matter. That really signifies that we can kind of meaningfully turn this around and try to end up at around 57.20 or 57.30. This seems like a slow grind here today, Caroline, which is unfortunate after the week that we had last week and the close that we had last week that we ended up this way. But it's just volatility, and you're seeing just lack of strength. And in fact, Nvidia is the only thing that's keeping us up, and it looks like that wants to give up here too, some of the ground that it's made for today. And if that's going to be the case, we could probably see additional selling going into the close. If that's going to be if Nvidia pretty much loses for the most part all of its gains right now.
Okay, so 56.80 is the next level. If we break through that, then what?
Then we have a problem. Pretty much. We break through that. The next area you want to see is 57.50 hold. There is some positioning there, but there's kind of like this gap between 56.80 and then 56.20, actually 56.25. So we don't really have that much to really kind of backfill, unfortunately. So this is the area that you really want to hold for now, especially kind of going into the close. You really do not want to close at the lows of a session from a technical standpoint. That gives bears a little bit of confidence that they might be able to continue to follow through here to the downside in the overnight hours, as well as for tomorrow's trading session. Now, we do have some economic data that's going to be hitting the wire, as well as some Fed speakers that can kind of turn this around. But the selling pressure has been too aggressive here to really kind of hold up on these levels. And right now, we're trading at around 56.90. So we're only about 10 points away from that 56.80 level. Below that, once again, hopefully that doesn't happen today. But if so, it could be a pretty bad close.
Okay, and you mentioned Nvidia. Nvidia is still higher, up more than 2%, but well off earlier highs. What specific levels are you looking for Nvidia, especially to the downside, I guess, here?
Yeah, you just want it to be able to hold here. I mean, the fact that it actually got to $130 today, I haven't been watching it too closely, but I saw it hit 130, and that was actually pretty remarkable, but just because of the price action. So right now, I would say 127 and a quarter would be the area that you would like to have it hold, and that's barring any type of meaningful sell-off that we're seeing across the board. And this is actually not only just like tech heavy, you're starting to see other defensive sectors getting hit today too, because of the 10-year treasury yield continues to rise to the upside. We're having a normalization and kind of backing out some of these extensive rate cut expectations for the remainder of the year. So you have sectors like real estate or utilities, which might seem small when you're looking at the market cap weighted index, but does have some meaningful, but is meaningful when you're kind of looking at sentiment. So this is kind of the sell everything type of scenario here today. And hopefully semiconductors, and then for the most part, hopefully Nvidia is going to be the one stock that's going to be able to hold us up here into the close. And so we don't have more bleeding going in to the last, let's say, 23 minutes left to go in the session.
All right, so yeah, there's a lot of pressure on Nvidia. In terms of just volatility, you mentioned obviously this uptick that we've seen in volatility, the VIX trading above 22 right now. Of course, we don't even have any of the main events yet this week. We have the inflation data, we have earnings coming up, we have Fed speakers. Should we expect to continue to see volatility tick higher? What should, kind of help us level set our expectations for that?
Yeah, so this week is pretty much the last week that we see from a seasonality standpoint, high volatility. We start to price in the election premium a little bit more, and then we start having the polling that really kind of gives us the groundwork as to how the Senate and the House is going to shape up. And then we probably will still have a question mark when it comes to the presidency for now. But what we do see on the screen right now is actually a backwardation between the spot VIX, which is measuring 30-day out vol, and then the front month contract. Now, this one's actually very notable because the backwardation for this contract actually also includes the election premium. So because we are seeing basically the spot VIX higher than the front month future, it does mean that we do have a little bit of uncertainty that's being priced into the market. And the reason why I say it's a little bit difficult to actually have this type of scenario is because the October contract for the VIX future has been pricing in a lot of that election risk. It's actually been in place, and the pricing and the backwardation of this curve has been in place for the last 2 to 3 months. So for us to actually have the ability to kind of break out of that backwardation of that curve, or break out of that curve in general, does mean that near-term volatility is something that we need to keep on our radar. And I'm not sure if it's only just the geopolitical risk that we have out there. I think it's some other things that might be priced in outside of the election as well. Maybe there is a concern that inflation might come in a little bit hotter than the street's expectations. I know you had Michael on earlier on MTL, and he kind of brought that up, and that is something that we have to be mindful of. Maybe we do see a small resurgence on year-over-year comps, and that causes a little bit of sell-off in the market. Who knows?
Yeah, and he was saying maybe that we might not even see any more rate cuts this year, which could also maybe wreak some havoc with this market. All right, Kevin Green, we'll be sure to keep checking in with you. Thanks so much.